Are you younger than age 59 and a half and are looking at a Roth conversion saying, gosh, I really want to do this. How should I cover the taxes? I've got a few ideas coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So the Roth conversion, fantastic strategy. Maybe at one time and one circumstance, you either didn't know or you were in a high tax bracket or company match, something like that. Money went into your retirement accounts, IRA or 401k, pre-tax, before taxes. And you're looking at that today saying, geez, I'm in a low tax bracket today, or I think tax rates are going up in the future, or you've built out a structure or strategy with your CFP and you're like, I want to move those dollars that have never been taxed and are growing taxable in my IRA. I want to move them to my Roth IRA and then have them grow tax-free forever. Well, that's called a Roth conversion. Fantastic strategy when it makes sense. And anytime you do that, when you flip that over, that money, the amount of money that you converted, that you moved from IRA to Roth, shows up on your tax return as income. Fantastic idea, okay? Early in my career, I had someone that, this is a couple of years, they had done it. They came in and met with us, and I'm looking over their previous couple tax returns just to see what's going on. And they did this move. They did a Roth conversion. And they were in their 20s and converted 10 grand. And I'm looking and I'm like, wait. Where's the penalty? You withheld on this. And they're like, well, what are you talking about? They didn't factor it correctly. Okay, when you're not yet age 59 and a half. This conversion, this money, it's going to land on your tax return, like I said, as taxable income, and you're going to have to pay tax on it. Well, if you withheld the taxes, if you withheld that when you did the conversion, well, that money is considered an actual distribution, not a conversion, the money that you withheld, and it's going to be not only taxable, but also have a penalty to it because you made a distribution from your IRA before age 59 and a half. If that made sense to you at all, and you said, that's unfair, think about it, okay? What if you just needed to get your money and your hands on some of your money, okay? And you said, I know what I'll do. I'll pretend like I'm going to Roth convert, and I'll withhold a bunch of taxes. I'll withhold 95% for taxes when I do that, and then I'll get a big tax refund, and then I'll have that to spend. Well, that's why the government has this in place. When you do a Roth conversion, there's no penalty. It's taxable. It's no penalty. But if you withhold dollars for taxes, it's considered a distribution. And if you're not yet age 59 and a half, a distribution from your IRA is going to have a 10% early withdrawal penalty. Okay, did I level the playing field? We're all set? So then the question is, if it makes sense for you to do a Roth conversion when you're younger than age 59 and a half, how should you pay the tax? How should you pay the tax? Well, I've got 4 ideas to consider, okay? Number 1 is you've been aware of this and you've got cash built up to pay the taxes. So when you do this Roth conversion, you either time it right and you say, okay, I know how much tax I'm going to owe. I'm going to send in a tax estimate for that quarter out of the cash that I've built up, that I've saved up, emergency fund type dollars, okay? Hopefully delayed spending type dollars, got the cash to cover it. Or you say, nope, I'm just going to owe taxes when I file my taxes and I've got the cash built up, I'll pay the taxes then. That's the best way to do it in my opinion. Why? Because if you've been saving up and you've got some cash on the side, when you convert, let's say $40,000 from your IRA into your Roth, 40 grand shows up in your Roth IRA, and that's the name of the game. How do you get as much money as possible paid at the lowest possible brackets and growing tax-free forever? If you can save up money, or you've got cash set aside, or maybe an inheritance, or maybe a bonus, or maybe something, and you say, you know what? I'm going to do a Roth conversion because it makes sense. I've done all the calculations, and the tax that I've got to pay from this Roth conversion, I've got the cash to pay that tax out of pocket. Phenomenal strategy. Second to that is very similar, and that is, well, I don't have the cash, but I've got some other investments. And you might be listening to this saying, what's this guy talking about? This is the same thing. Well, it's not, okay? It's not. Sometimes if you inherit an investment account from someone, or maybe you weren't aware of having a tax shelter strategy early on in your career, and you've got some dollars that you've saved up in a non-tax sheltered account, or if you work for a business that gives you stock options, or you're buying shares, or you get restricted shares and you get those cashed out and you say, well, what do I do with these dollars? Well, I'm assuming the first thing you're not thinking is, well, I'm going to use these dollars to pay taxes when I do a Roth conversion, but it's possible, okay? Just working with someone where it made sense based on their situation, they were in the 12% tax bracket, to do some Roth conversions. And we're wondering, well, how are you going to pay the tax on this? Should I withhold? This individual is actually over age 60. And I said, no, what about the inheritance dollars that you just inherited from mom and dad? You've got that cash. Right now that cash, or those dollars, are growing in a taxable account. All the dividends and interest, anytime you sell something, it's all going to show up as on your tax return. What if you sold some of those investments and paid the tax on your Roth conversion? That allows you to get more dollars in that Roth IRA, land in that Roth IRA, because you've got other resources to pay that tax bill. The third approach to this one's tricky. Just had an email from a fan of the show reach out couple weeks ago and say, thinking about doing a Roth conversion, not sure where I can get the cash from. And we started doing some analysis, and it turns out this individual married, filing jointly with a couple kids, those couple kids getting qualifying for child tax credits and some other tax credits as well. Bingo, they were getting about $5,000 a year in tax refunds. All right, well, I know that's nice and that's enjoyable, and it helps you buy, something or puts that money to use when you get it. It's nice, but what if we converted enough money from your IRA to your Roth that used up that refund? So instead of getting a refund of $5,000, you broke even, okay? Then it's not a big out-of-pocket cash burden, okay? You've used up sort of this money you already had on deposit that you were going to get refunded from the IRS, but instead use that to cover the tax on the Roth conversion. Huge, huge idea. Makes a lot of sense for young families when you're looking and saying, well, geez, I've got all these kids now, and maybe, one of the spouses just went to part-time or started staying home. Income's lower than it used to be. Maybe we should convert some of these dollars, but obviously you're younger than age 59 and a half, but obviously those kiddos represent some tax credits that maybe you weren't getting before. Consider using that tax refund as the amount at which to determine how much you should convert. And then the fourth idea, and guys, just do this with the CFP, the working with them. The fourth idea is, well, if the Roth conversion makes that much sense and you don't have a way to cover the taxes, consider just withholding the tax. Wow, withholding the tax, those dollars would be taxable, yep, and you'd have a 10% penalty. But long time ago, early in my career, young financial advisor in their 20s, just like me, had been saving up and then looked at things and said, 26 years old, why am I doing this? I'm going to convert, I think he had $30,000 of employer match and other dollars. I'm going to convert this money over to a Roth IRA, and I'll just withhold the taxes and pay the penalty. And it was like, what? That's crazy. Why would you do that? Well, guys, that was like 14 years ago. What's happened in the market in the past 14 years? All of that growth. Yes, he paid a penalty on the, I don't know what it was, $4,000 that he, so get this, let's just do this math. Yes, he paid the penalty on, let's say he converted 30,000, withheld 4,000, okay? A 10% penalty on that withholding is $400, okay? So he paid a penalty of $400, and now all that growth from the past 14 years plus the next 30 or 40 years, it's all gonna be growing tax-free. Now, I'm not gonna blindly tell you in every situation, yeah, just withhold the tax and pay the penalty. It's fine. I'm just telling you, depending on your age, depending on your situation, depending on your tax bracket, it may make sense if you don't have any other option and the Roth conversion is so clearly obvious that you may just want to withhold the taxes and pay the penalty. Work with your CFP. The point with this video isn't to give you ideas to go out and run with. No. People get in a lot of trouble hearing something online, reading a quick article and saying, well, that's what I should do. Bam, do it. No. Work with your certified financial planner. Have them help you evaluate all 6 areas of your financial life, figure out what the right approach is, the best choice among a list of good ones, okay? That's where wisdom comes in. Picking amongst a list of good options, the wise decision is the best one, the one that brings synergy to your financial life. I hope this helps you. If you don't have a CFP on your team that can help you do this analysis, contact one on my team. You can find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.